Hey, how you doing? It's Ronnie. We're going to give it a minute. We're going to talk credit today. Hope you guys are having a great Monday. My name is Ronnie Haskins, owner of Auto Search USA here in Colorado Springs. We are going to talk about 3 quick tips for your credit today when it comes to a car loan. My mission is to uplift your life and help you make better money decisions through using the car business as my tool. I see a lot of people's credit, a lot of people's money matters, and payments and things of that nature, and help them make good decisions when it comes to their money. And so that's what I'm hoping you can take away from this today, is just an easier way to do it, and probably a better way for you to make the decision to use your credit wisely. So let's talk about it. All I got is 3 tips, so I won't keep you too long. But the first thing is, do you know your credit score and what's actually on your credit? I can't tell you how many times I talk to people and they're like, well, the dealer said that I qualify for this rate. And I'm like, well, don't you know what you should qualify for? And they do not know. Like, we don't know as a society what our score is, what's on our credit report, how big the file is, what we owe, who we owe. These are answers you should have at all times, guys. You should be able to know and tell me exactly what your score is and what's on your credit. So that's the first thing I would start with, is knowing what it is. I think on a whole, as society, we like to just put our head in the sand. Like, if I don't think about it, it'll go away. Like, no, that's not what's happening. It's actually compounding into a bigger problem because we're not taking a look at it and we're not paying attention to it. So find out what's on your credit score. How do you do that? Annualcreditreport.com, and get your credit report once free every year. All you have to do is put your information in, and it's going to ask you some questions to verify your ID, and you can download that information right now. What it will not tell you is what your score is, but it will tell you exactly what's on your credit file. And so if there's something on there that doesn't belong there, like say you got a Best Buy card on there and you don't actually have a Best Buy card, then you can contest that information and fight it. And there are companies out there that can help you get that stuff cleaned up. But annualcreditreport.com is the first place you can go if you want to do it for free and get that credit report. So that's the first thing I would do. Now, let's spend a little bit of time talking about how your credit affects what you can buy. I don't know if you know this or not, but when you buy vehicles or you get credit on a credit card or whatever the case may be, your credit score dictates what you're paying for the money. So they start very low for people with high credit scores, and the numbers get pretty big, like 21% for people with low credit scores. Credit scores are usually measured from 400 all the way up to around 900, 400 to 900. So the people that are closer to 900 get the cheapest rates for money. And it's amazing. Like, I'll share this with you as soon as I bring this form up. But when you're looking at what you're paying for on a car loan, let me give you this fact. So if you have a 740 plus score, you are then decided to be A plus credit. The best A plus credit on a 2013 to 2018 used car or new car right now is 3.99. That's in town in Colorado Springs. And it's pretty much going to be similar nationwide. And this is not taking into effect any subsidized loans like 2.99 at Mazda right now or 0% at Ford. You still have to qualify for those. But the best going rate at one of the best credit unions in town right now is 3.99 for a 740 score. When you move to tier A, which is 720 to 739, your money goes to 4.39%. So you're actually going to be spending on $30,000 at 3.99% over 5 years. You will spend $3,463 on a $30,000 car. Just know that, like, if you're buying a $30,000 car, you're doing a 5-year loan, you're not putting any money down, you're financing the taxes and everything, you're going to spend around $3,400 at 3.99%. So if I change that number to 4.39%, you're now going to spend about $400 more. So that's about $3,800 in interest. which probably isn't a big deal. But check this out. Once you go below 720 on your credit score, the interest rate goes to 6.05. So if I plug in 6.05 on my screen, it goes from 3,800 over 5 years to 5,331. So that's crazy. Like, you are in control of how much you pay for money. You understand? Like, if your credit score is below 720 on a $30,000 car, you're going to spend $5,300 in interest over 5 years if you make every payment. Of course, if you pay it off early, you can avoid some of that interest and whatever the case may be. However, you only qualified for 6.05%. So $5,300 is what you're looking at until you get that score up. And I'll talk to you in a minute about how you can work on getting that score up, but I just want to point this stuff out. So let's move to that was tier B. So A plus is 3.99%, which is around $3,400 in interest. Tier 2 or A paper is 720 to 739 score. That's 4.39%, which is around $3,800 in interest over 5 years on a $30,000 car. And then you move to tier B when you drop below 720 but above 680. So 680 to 719 is 6.05, which is a big number. So you jump to 5,331 in interest over 5 years. Now let's say you only have a 679 score, like you're below the 680 mark. And so you're then considered C tier. C tier is 9.85%, guys. So we go from the best rate of $3,400 in interest over 5 years to 9.85%, $8,937 in interest. Raise your hand or post in the comments if you didn't even realize how much interest you're paying on your loans. That's one thing you can also take from this video and go learn about your own credit situation. Let's say you have a credit card that you're paying 27% on, but your score is good enough to get another credit card at 15%. You can then save years of interest by transferring that balance to another credit card. I'm not saying do it and keep maxing them out, guys, but there's ways you can improve your situation without doing much of anything, but maybe just getting online and applying for a different card. But, you know, that's crazy. So $8,900 if your score is a 650 to 679. That's considered tier C. At this particular credit union, they also have a D tier, which I have to admit, I don't do many deals in the D tier. It's just not my forte. But that's for folks who have a 600 credit score up to 649. And so when I put that rate in, we're now looking at 15.5%. So if you've got a 600 to 649 on a $30,000 car, 15.5%. Remember, A plus was $3,400 in interest, and now we're at D tier. $14,641 in interest over 5 years. You may still be able to afford that monthly payment, which on 30 grand is almost $800 a month. But golly, man, I mean, so this is the whole message today is your credit score dictates what you are going to pay for money. And the higher you keep that score, the less money costs you on a daily basis in your life, on your credit cards, your cars, your homes, everything. And this is just the second largest purchase you make, right? Just imagine how it affects you on a house. I could probably come back later and do that and put 360 months in. But like, it's going to be like 50, 60, 70, 80, $100,000 if you go from tier D to tier A. So, all right, that's some facts I wanted to share with you. How your credit score actually dictates how much money you're spending for that money. Because money comes at a cost. It's either 3.99% for great credit, 15.5% for tier D. So guys, work on your credit score. I talked about a couple of examples of how you can improve it a little bit later in the video. Now, the next point I wanted to make, which we're there now, is what can you do? So, you know, I know my situation isn't very good. I know I'm in D tier. I'm at 649. And I just can't seem to get any better. So the usual thing that we do as consumers is if it's not in front of us on a daily basis, we cheat to push it down so we don't have to think about it. So the first thing I want you to do is go to annualcreditreport.com and find out what's on your credit report. It'll be listed in detail how much money you owe. It also will tell you your payment history with them, if you're paying on time, if you're late, if you have slow pays, all these different things that you can look at to go see exactly where you stand and why you have a 649. Now, the second thing you can do is invest a little bit of money. I use my FICO score to track my own credit. It's a website. I'm going to pull it up right now. My FICO. Yep. So let me log in real quick so I can give you the data on this. Okay, so I'm logged in. myfico.com. So myfico.com. Go to that site. It costs like $16 a month, but it sends me a message every time something happens on my credit. If it goes up, if it goes down, if a balance changes, if I have something that needs to be disputed, it all shows up. I get messages all the time about my credit because I know how much I save by keeping a high credit score. Okay? And so I try to monitor it on a weekly, daily basis to make sure that it remains where I think it should be. Now, what I'll also get from this site is it tells me how I can improve my score. So it gives me little hypotheticals. Like the one right now, it says that if I want to move from 796 to 850, I need to pay down X amount of dollars in 24 months. So that will move my score hypothetically that way. So you can look at that situation for your own credit, and obviously if nothing else changes, right? If I just pay down that much debt, my score is going to go up just about 50 points. So keep that in mind. Your credit is worth $16 a month, guys. I get paid nothing from my FICO. I am not connected with them. I am a consumer. But I'm telling you, it's helped me track everything, laser track it over the last probably 5 or 6 years that I've used it, and I like it quite a bit. It also will let me print my scores. Print my reports so I can take a look at them to make sure that there's no funny business on there or anything of that nature. And wouldn't you want to know? Wouldn't you want to know what's on your credit? I do. So that's 2 ways that you can go track it. Some things that I know, and I'm in no way a credit expert, guys, but what I do know based on experience is your balances. If you want your score to go up, you need to keep your balance below 50% of your entire credit limit. So let's say you have a credit card that has a $5,000 balance or availability. You have availability to $5,000. You want to make sure that you keep that credit card below $2,500. What you're carrying revolving balance. You want to try and keep that down. It's a telltale sign when all of your credit cards are maxed out. And every month they're over 50%, your score ticks down little by little until you're at that D tier and you got to pay 15% for the money. So that's something you can do as well. It's a little bit more difficult to get into that mindset, but you can do it. There's one more thing I'd like to point out, guys, and this is a hard one for people. It's hard for us to learn in general. Let's say I've got 10 grand in the bank, right? Like $10,000 that I just keep there. And then I've got an emergency fund with $5,000 in it. Like I've got some money and I've got a credit card that has $8,000 balance and I'm making the minimum payment every month. What we don't think about is I can take my 8 grand out of my savings and pay that card off and I'll still have the availability to that money. But we seem to get in a mindset of if I pay it off, I'm just going to run it back up. Well, if you're going to do that, don't do it. But you've got to make more than the minimum payment every month to make sure your credit is staying where it is or moving in a positive direction. So it's tough. Going into Christmas time, we're almost at Thanksgiving. These money decisions that you're making right now are going to impact you in ways that are going to hit your wallet. So let's recap what I talked about. A tier, 3.99%. On a $30,000 car, that's going to cost you around $3,400 in interest over 5 years. If you have less than a 650 score and your rate is 15.5%, that's going to cost you $14,641 in interest over 5 years. So, $14,641, $3,400. Guys, $11,200 just because we didn't do little things to get our credit to move a little bit higher. And now, don't get me wrong, I know this is going to be hard for some of us to grasp, but we can make a plan and we can work on our credit on a monthly basis to make sure that we're moving in a positive direction by paying off that Best Buy card that you've been having sitting at $700 for 6 months and you're making that $30 payment. Just make a $100 payment so you can knock it down. And then don't go buy anything else this year. Bonus yourself next tax day or something like that. But I hope this was helpful. I wanted to talk specifically about how it affected car loans because you hear about the different interest rates and you hear about what matters, but this is hardcore facts today, guys. This is how it affects you. Keep your credit score over 720 if possible, and don't drop down below 649 because that's going to give you the highest rates, the most interest you're going to pay ever, and it also limits what you can buy. So I hope this was helpful. Please share it with your friends. Thanks for tuning in with me. And if you've got any questions, as always, just email me, put it in the comments, or call me, 719-213-7150. Ronnie Haskins, Auto Search USA. Thanks, guys.